It is Monday, January 29th, and this is our Insider Access briefing. So I'm actually going to start with Roku because we're making this first portion of the video public. I want to provide this just as a free opportunity for people to get some education on some of my stock trade ideas that I post to Discord. So this one's really important because I post a lot of ideas and I'm constantly getting questioned, how do you come up with your ideas? What do you do? What do you do? Because everybody's looking for the magic bullet. And the reason that people look for the magic bullet is because in this sort of Twitter sphere or the X sphere, if you will, there's a lot of fakes. There's a lot of people who don't have a real history in the markets and don't understand what they're doing. So they've sort of condensed it into this marketable, hey, check my Discord for my call outs. Don't worry, all you have to do is follow this flow or indicator or, buy these magic beans and plant them and you'll get rich, right? And we know that doesn't make any sense. So I want to dissect this trade just a little bit, particularly with my morning audible, if you will, my morning adjustment, so that people can get a better understanding. So first of all, we had the 91.45 rejection idea on Roku. But more important than that, I want to take a look at what I posted. So if you look last night, and there's the timestamps, and you could check on my X profile. This isn't anything that's exclusive. You can go look at this yourself. I just took the screenshot for convenience purposes. Last night, January 28th, 8:19 p.m., when I put out my watch list, I said Roku at 90.90, and as always, we'll review in the morning. And that was the idea coming in, 90.90. And then this morning, I made a change, and I specifically stated why I was making that change. So this is 8:25 a.m., January 29th. Again, you can go look at this. I'm just putting it here for convenience. And I moved to 91.45. But the most important thing, what if I get hit by a, flying UFO? Those are going around these days, right? What if I get hit by a UFO and I'm not here and I can't help people out? I want to reach back and help people out and help them understand the why, right? Because if you understand the why, you could be a better trader. Even if you're an insider and you're working with my Discord ideas and working with any of my ideas, just having that better depth and breadth of knowledge will help you no matter where you are in the markets. And so what I said was yields are opening the day lower. So I'm giving Roku a bit more space. So what I did is that's combining what? That is macro data with technical data. So I have my technical entry point where I'm looking for rejection. That was 90.90, but because the yields are opening the day lower, I'm giving Roku a little bit more space. I'm moving up to the next rejection point, right, on the technical side. And so that's the combination and the absolute power of using the combination of technical and macro data, right? So had I gone with 90.90, here, we go blown out of the water and stopped out. And then it goes up and down, maybe stops out again, goes up, down, stops out again. And then maybe on the way down, we jump in, right? Or maybe in the best case, you get stopped out, maybe catch it on the way back down. Not nearly as clean a trade. Here, perfect hit. So what I said was yields are down. And then a simple way of looking at the yields is the TNX. So we saw a gap down. And one of the things we track is the 10-year yield, right? It's important right now. The yield curves, looking at the 10 and the 2 and understanding in deeper context. But just seeing the gap down, one of the things we've tracked through Insider Access is where the 10 is. And it doesn't impact every day. And I've stressed this to insiders. I've said, look, just because you see the 10 going up and down, it is not the key single market modulator, but there are certain points and there are certain actions which will suggest that we have an opportunity to go directionally and get a catalyst in that direction. And I made that extremely clear. So there's zero guesswork. There's no looking in hindsight and saying, oh, well, bro, the 10-year was up or down. No, I said it in the morning before, and I said, this is why I'm adjusting up. And so here's the 10-year down. Here's Roku making a break up, right? And that's going to wedge us into the next portion of what we talk about. And I'm going to talk about why everything shot up later in the day, and because that bridges to the same thing. And I'll stop here and just note one thing that's really, really important. If one of the most important things I would suggest for anybody, whether you're an intermediate, a novice, a beginner, whether you've been in the markets for a while, beware of the con artists and the hucksters. When you hear anybody dismiss one of the important elements of analyzing securities and being able to trade. And so to me, there are multiple things. It's fundamentals, understanding the fundamentals of companies and valuations. If you don't understand that, you don't understand anything about the markets. And if anybody says, oh, it's not about the fundamentals, are you crazy? Why do you think we invest in companies? If you own a company, right? Let's say you own an ice cream shop. Fundamentals means how much money are you making? Are you making money? Are you losing money? What are your earnings? If you tell me that doesn't matter, you're a crazy person who doesn't like money, right? I would never work with someone like that. Of course it matters whether the company's making money or losing money. That matters tremendously. And being able to gauge that and where the changes are is important. So for example, if I hear there's news on Apple or Roku, and I know it's going to have a positive fundamental effect, that can drive me to make a day trade, or it can be one of the elements that I weigh. If you hear somebody that completely discounts technical data, that's absolute nonsense. Technical data, volume, patterns, what we see during the day, what we see in price action, where we see things moving, where we see consolidation, that gives you hints as well. That helps you get some insight into the market. Fundamental, technical, and of course, news-based and macro. Macro data is so critical. We get moves off the 10-year. I actually have video posts on Twitter in my highlight section that showed within insiders, we traded off moves in the 10-year yield multiple times this year, where I've set specific targets. 4.19 was our last one, and it was an immediate catalyst that sent the markets down. And I don't mean a day or two later. I mean 1 minute later, 2 minutes later, markets took off. And in advance, I discussed with insiders and said, when we hit here, if we hit here, let's keep an eye out for that. We touch, that's going to be a market catalyst upside. We touch, market catalyst downside. An easy way of explaining how macro is beneficial, okay, or why macro is important, okay, let the Feds come out tomorrow and say we're hiking rates. I promise you the markets will tank. These highs that we see on the S&P 500, you will see them dissolve immediately. You will see that shoot straight down. I'm going to move to the daily. This will go here. 50-point basis hike, even 25 will send the markets plummeting, right? Conversely, if the Feds come out tomorrow and say we're making a cut, we're making it sooner than expected, we're cutting by 50 basis points, the markets go rocketing. That's macro data, right? So when you hear people trying to tell you things like this doesn't matter and that doesn't matter, I will translate that for you. And I've been in the business for a long time and I've seen a lot of people like this. The guys who didn't catch on, the certain people, you could not be a specialist in something. But when they're dismissing it or trying to convince you of something, that's their insecurities. That's all it is. That's someone saying, I don't understand this, so I'd prefer if you didn't care about it because I want to be the guy. I want to be the girl. I want to be the person that puts on airs that I'm an expert and I'm a pro and you should listen to me and I know what I'm talking about. But don't ask me questions about that because I don't understand anything about it and it makes me insecure. Of course, fundamentals are critically important. Of course, news is critically important, right? If Apple has major news right now, that's critically important. Typically, news pertains to fundamentals. If their CEO, Tim Cook, resigns, or if Elon leaves Tesla, or you get the idea. That's all news. It pertains to the fundamentals of the company. You'll see major reactions of the company. Fundamentals matter. That's news as well. What's happening with the company. Technical matters, right? And macro data is critical. What's going on with the economy? We move into bull markets, we move into bear markets. And this was an example on ROKU of pairing the two together. And I frequently do that. And that's what gives you the best edge. Any honest person will tell you you're looking to get the most confidence possible, align the most factors in your favor, and then you execute a trade. And that's why often days I say, look, it's not a good day to jump in on the markets. I don't have enough moving in my favor. I'm not just going to trade off technical data because there's too many other factors that are confounding. Keep my money on the sidelines. And insiders know we're patient. Sometimes there's a lot of different trade ideas in a week. Sometimes it's a little bit more sparse, but my accuracy remains high. And in fact, if you look back to Twitter, since last week, there have been 3 ideas. There was Microsoft twice, Roku once today. All 3 that triggered hit perfectly. Why? Because I don't spam it out. I don't play the con artist games. It's not nonsense. And if it's not there, I don't want to trade it. I need multiple factors. Doesn't mean I'll be perfect all the time, right? But I get asked all the time, how do you run this phenomenal record? You do the work. And that's what it is when somebody doesn't like one of those factors. And the easiest one to learn is technical, because someone can con you into lines on a page. The technical fraudsters will never want to talk about fundamentals because they don't understand it, because you can't just look at the lines on a page. You need to have typically you have to have a pretty good education in finance and understand business models. Macro, you need to understand economics and how things modulate prices and what's important. That's where you put the work in. And people want the shortcut. They want to spend time marketing to you. So that was just a perfect example of how the TNX helped modulate. That's the 10-year, helped modulate on ROKU. But let's look at a different one. How about we jump into what happened with the SPY today? Because that was, again, a macro item. And I could tell you what the market's like today when there was a pop, exactly when we saw the pop. So right around 3 o'clock, right? So that's 1500, that's 3 o'clock. That is exactly when we had the Feds discuss the borrowing, right? Sources and uses reconciliation table. So there's 3 points here that I pinpointed, and this is directly taken from the Treasury. So if you look at it from October to December, in terms of the forecast, the change in cash balance increased by 19 billion. Importantly, for the forecasts, right? Because we know the feds are just taking money, borrowing money, printing money, spending money. We're looking at forecast revisions for first quarter of 2024. Here's what came in positive. And this was announced today. You can go look it up. You can go on the Treasury website and check it out and learn for yourself. This is a table taken directly from them. First quarter, 55 billion less than anticipated. So when we were in October 31st, Halloween 2023, it was 816. We're looking at about 760 and change. It works out to 55 billion. I know we're off by it looks like it's off by a number there, 50, 51. But we're expecting a forecast revision, 55 billion, less than expected, right? So that the cash balance ended up higher for October to December. The forecast for January and March is going to be 55 billion lower. And April to June drops in terms of the marketable borrowing to 202 billion. And now those are 3 big important factors, because a big concern has been what's going on with the feds as of late. And now if you don't understand marketable borrowing and all these other elements, you can look. It just means we're doing better financially. That doesn't mean the US doesn't have a massive deficit, but 19 billion better in that last quarter, in the fourth quarter, 55 billion better on the forecasts. Substantial and tremendous drop April to June here at 202 billion. And if you look at the trend in terms of what we're borrowing, marketable borrowing, right? 1.01 trillion, 776 billion. Then it goes up slightly to 816, but down to 202. And so this is showing a trend down. So this is a step down and then another big step down. So the trend is looking good. The revisions are better. We're 55 billion better than we expected. 19 billion better increase. That dropped at 3 o'clock. What happened at 3 o'clock exactly? Well, since nobody cares about macro or the scene within the economy, of course they do, right? It's the same thing as saying, do people care whether there's a recession or not? Yeah, they care because companies make less money in a recession. That's macro, right? And so, yes, it's a little bit harder to anticipate, but that's why the con artists hate it. They just want to say, no, look at the 9 EMA and look at this cross section and these 2 lines on a page. That's what happened today. So I know a lot of people were wondering. Now, an interesting element as well that I brought up was this occurred on much lower volume, right? So it was a very light volume day. The later portion of the day picked up though. So the later portion looked like good volume. So why was the earlier portion of the day lighter volume? Well, traders and investors, including myself, weren't expecting a surprise. That's why it's a surprise revision, right? It wasn't so much of the forecast going forward, but a big element was the revision here and what we're looking at going forward. And then of course, the increase in cash balance. So it was a surprise to everyone and the markets took off. So if you look at this later portion, this had adequate volume, but I put up a post saying we're on lighter volume. So why would we have lighter volume throughout the day before we had this big announcement? Well, because we have huge earnings this week, right? These are just some of them. Apple, Meta, Alphabet, Amazon, Microsoft, and AMD is reporting this week. And we have UPS, and we have several others. And we had SoFi already reporting a lot of smaller cap and large caps and mega caps. Huge week. And what else do we have? We have a massive calendar. And I'll just let everybody know one thing we're looking for. You're going to move next. Now the Treasury refunding announcement becomes even more important. That's going to be Wednesday morning. So Wednesday morning is going to be a wild morning, right? Because we're going to have Treasury refunding announcement at 8:30. We have ADP employment. We have Fed interest rate decision. So that's going to be your next point. Why? Why did these things impact the markets? Well, because it's macro data, just like jobs impact the markets, right? And how do you use that to your advantage? A multitude of ways. I explained with TNX relative to ROKU. So I wanted everybody to get a little bit more of a comprehensive view of the markets and understand some of the factors that you deal with. Does this make you a professional overnight where you can gauge these kind of things and balance it all and understand everything perfectly? No. But you know what? I'd rather people be on the honest path to really improving and really being empowered and actually understanding what the heck is going on in the markets and not feeling like it's all random and rigged and they don't know which one of the 500 lines on a page and what's resistance and volume shelving and what they should look at next. Because again, the technical side always gets packaged and misexplained. I'd rather you guys actually understand and say, hey, all right, maybe I don't understand this perfectly, but I am actually understanding the truth, right? I'd rather understand a little bit of truth then know a lot, but have a lot of that be nonsense. So I hope that was helpful as an explanation. I dig into a lot of this, and obviously it's something, if you're doing it full time, you're able to go through all this data and be able to track and use different resources and look at different data. But I hope that was helpful. The lighter volume, yeah, that's just traders sort of sitting on their hands in advance of mega earnings, and that is completely normal with all the activity we have this week. It was expected to be a light neutral day. Bang, surprise, markets jump. Jumped about 2.5 points before close. That's pretty significant, right? In that short span of time. Is this the biggest jump ever? No. But it was very sharp, and again, exactly at 3 o'clock. You can see the time down here, not a minute later. News drops, the smart marks see it, set into the systems, we see a surprise, and then it takes off. How do they respond that quickly? So this is when we talk about algorithms. You hear a lot of, again, the con artists like to talk about the algos, bro, the algos. They don't know anything about the algos. If some guy in his basement who 2 weeks ago was, just working some random job, has cracked the code of the algorithms for multi-billion-dollar institutions, I don't know what he's doing talking about it on Twitter. I don't decode the algorithms. I just understand the markets. So they have it set immediately. So as that data feeds through to their system, it's a buy signal. That's why it happened exactly in tandem with, getting the Fed announcement and having it come through. And that helps you have a better understanding of what happened with the S&P 500. And hopefully that helps everybody with a better understanding of just how the 10-year can modulate. So insiders, stay tuned. We're going to move on. We have a lot to cover. To those of you who are taking this for free, thanks.